thank you to all of you guys that are out there that have joined us so far. We're over 60 or 65 participants. I love that. Happy Military May. It's a lot going on this month. And so we appreciate you joining us for this webinar series. I know that it's been a couple months since we've been hosting these, and so we're super excited to get these back going. Military May is a perfect time. So we are going to talk about the military culture and communications this month. And if you have questions, obviously throw those into the chat. Again, my name is Michelle Leesmann. I am the Director of VA Education and Policy here at Newrez. I started March 2nd. I am blessed to be part of the ecosystem that we have here at the enterprise level of Newrez and excited to bring this to you guys today. So connecting with your veteran clients. If you are a veteran yourself, first we want you to know that your service is very much deeply appreciated. And even if you have served, I think reviewing some current VA benefits, some issues in today's environment that are affecting our military members can still help you confidently guide through not just veteran, but also active duty military borrowers. And so for those of you that are not veterans, learning these foundational military concepts will help you relate more naturally to the clients that are in your network and in your community. A little appreciation and preparation goes a long way in building that rapport with your military clients. And then as a reminder, always, if you will, please offer a sincere thank you to veterans and their spouses when you're engaging in conversation. They want to take a moment to share a story in my hometown. I believe we had the oldest Medal of Honor recipient from World War II. He was 105 years old and passed away 2 days ago. So we honor his family very, very much in our community and just across the board. So Jasper was his name, and long, beautiful life he definitely led. So military culture 101 is really truly you build trust through understanding what where they came from and what they represent. So first we want to share the official branches of the U.S. Armed Forces. So we have a total of 7. So we've got the different insignias here. We've got the This Will Defend for the Army, America's Navy, Aim High, Fly, Fight, and Win for our Air Force. And our National Guard, Always Ready, Always There. And we have our Marine Corps, which is Semper Fidelis, meaning always faithful. And if there's a Marine Corps veteran out there, and if I mispronounce that, please, I apologize. And then Semper Paratus means always prepared, which is our Coast Guard. And then our newest branch of service is our Space Force, Semper Supra, always above. Those are some of the insignias that and logos for those different branches of service. Some of our service dress uniforms and the official service names. So for our Army, we've got our soldiers. The Navy are seamen and sailors. Our Air Force are airmen. National Guard, reserves, airmen, or soldiers, depending on which branch they're in. The Marines are the Marine. And Coast Guard is Coast Guardsmen, and Space Force are the Guardians. Military time. So this was always one that kind of caught me off guard until I really learned it. And it is important to understand military time when you're working with a veteran or service member. It's the 24-hour clock. And so 6 a.m. is 0600 hours. 6 p.m. would be 1800 hours. And in the military, if you're not early, you're late. And that is very important. If you set an appointment with a military member or a veteran, be early. Honor their time, and that shows respect right off the bat. The military phonetic alphabet, sorry, I cannot talk today. So it's actually an ERDS. It's an International Radio Telephony Spelling Alphabet. And they adopted that. They use that phonetic alphabet. If you are reiterating or spelling out a name or a word when you're speaking with a military member, understand that these are the examples that they will use for each letter of the alphabet. I won't read through each of them, but you can see what they are listed there. And it was developed by the International Civil Aviation Organization for different radio communications. It's a standard across the world on that. So our current active duty military strength as of the beginning of this year, at the end of January, you can see that Army is our strongest branch of service as far as numbers are concerned. So a little over 450,000 service members in the Army. We've got a little over 340,000 in the Navy, and then Air Force is next there at 330. Marine Corps has 170. Coast Guard's at about 43,000. And then again, our newest branch of service, Space Force, is right over 10,000. So Space Force was established in 2019, in December of 2019. So they're catching up, but they're catching up quickly, and they are definitely a force to be reckoned with. So something interesting that I want to share is you guys understand the level of responsibility that our different commands have. So a sergeant oversees a squad. A squad consists of 10 soldiers. And then the second lieutenant oversees a platoon, which is 4 squads in total. The captain has a company. Companies consist of 4 platoons. So you're getting up there to about 160 individuals whenever we're talking the responsibilities of a captain. Lieutenant colonels, they oversee a battalion. Those battalions consist of 4 different companies. And then we've got our brigadier generals, which oversee a brigade. Those brigades consist of 4 battalions. So brigadier generals are over about 2,500 soldiers in all. And then we've got our major generals. They have divisions, and each division oversees 3 brigades. So that's over 7,500, about 7,680 to be precise, soldiers. So whenever you are talking to a veteran or a service member and you hear their titling, this kind of gives you an idea. And this is specific to the Army. I do want to point that out. So specifics may vary as far as the names and the chains of commands per branch. But to give you an idea from the Army's perspective, this is the size of responsibility that like each one of these leaders maintain. So a few insignia basics. When you see someone in their service uniform or dress uniform rather, and they have their insignias on their shoulder, this gives you an idea of what these mean. We didn't have room on the slide, but you can go to the Defense, Government of Defense website, defense.gov/resources/insignia, which is down there at the bottom. And you can see all of them. We're showing here the enlisted insignia. So E stands for insignia, and the ranks are from E1 up to E9. So you have enlisted 1 all the way up into enlisted 9. And they generally are ordered from private to corporal to sergeant. And then the Navy, though, their order is seaman to petty officer. Air Force is airmen. They're not privates or corporals. And essentially, the more bars and decoration, the higher the rank. So you can see here on an E2 for our different branches of service. This is the insignia for an E2. Then we move up a few ranks here at an E5, and then you have an E9. A lot of times, whenever you have a service member, especially active duty service member, that calls and they are looking for a home, they're going to throw their rank out. Veterans, not so much, but the active duty service members absolutely will let you know what their rank is, which is great. Um, so our insignias for the warrant officers. So W stands for warrant officers. These are highly trained specialists in a very certain industry and field. For instance, I have my brother-in-law as a CW2 or CWO2 in transport. Air Force and Space Force do not have warrant officers. At the C on the CWO2 stands for chief. So you've got your warrant officer one. There's special training that they have to go through for that. And then your chief warrant officers also have every level has an additional round of education and training that they have to go through. So those are more bars that you can see, and where they're placed here for the Navy is on their sleeve. Understanding the military structure matters. That's what we just kind of went through, but understanding the stressors matters just as much. Our military families, our military members, active duty, have a level of stress on top of what civilian borrowers have that a lot of people don't understand. Um, Here's some of the issues and concerns that our active duty service members and their spouses have. um, Military pay is at 50%. BAH, which is basic housing allowance or basic allowance for housing, and off-base housing concerns is another high concern for service members. The amount of time that they spend away from their family. They also worry about their spouse's employment. Military spouses have a really hard time maintaining employment. You'll see on the next slide, we'll talk about permanent change of station, PCS. And when military spouses are trying to build their career, knowing that in a couple of years they might have to move, sometimes they find reluctancy in the workforce of someone wanting to bring them on and invest in them, knowing that they're going to be moving in a couple of years. They feel like there's a lack of control over their military career, and the relocation of the PCS issues. Those are some of the top concerns for service members. Spouses have some of the similar ones. Obviously, they have concerns with their own employment, and the military pay for the family overall, and the amount of time that their spouse is away from the family. If you have children, even the spouse, that separation anxiety, that time away, that reintegration process, when they are serving, if they're reserve, if they're gone for training. We've got some service members that have been gone and away from their family for years right now. So that's a big stressor on the families. BAH and off-base housing concerns. When they get their PCS orders, they're given orders to report to a new duty station within a certain time frame. It's up to them to determine where they're going to live. If they want to live on base, which there's very limited on base housing, the value at the structure and on base housing isn't always the best. And then you have to balance the cost of off base housing with what that housing allowance is going to be at that new duty station as well. And you don't know if you're going to get an increase on BAH every year. So cost of living might go up, but that doesn't mean necessarily that the BAH increases. So and then you have the dependent, the child or the children's education. You're faced with those PCSs, excuse me, and that change in switching from schools, and do we want to homeschool? What are the schools going to be like in our new duty station? Imagine picking up your entire household and moving to an area you really know nothing about, more than likely. Sometimes they go back to the same place that they were stationed at previously, but a lot of times they're going somewhere brand new and they don't have any control of that. They need to live within a certain proximity of that base. And so they have to do the research for educational opportunities. A lot of times they're moving in the middle of the school year or a week or 2 weeks before school's out. You've got finals. I know a family that just went through that. They're going through it right now, as a matter of fact. So, that's always a top concern. And then that all kind of ties into that relocation PCS issues. You can put in for a specific duty station whenever you're given orders that you're going to PCS, but it's not guaranteed. And so they could tell you you're PCSing to this duty station, and then within a couple of weeks of that time frame, cancel that based off needs and switch it up and send you somewhere else, or you stay put. So there's not a lot of control, if you will, over that relocation process. So again, PCS is permanent change of station. If you're in an active duty military market, you definitely need to know that acronym. There is a slide, I think it's the last slide. We're going to go over some key acronyms that you need to know. But 33% of our military families relocate each year. That's an annual basis, 33%. So that's up to 400,000 service members and family that move annually. So that is the opportunity that exists in our markets, in our industry, to serve and say thank you and give back through our expertise to our service members by really diving in, understanding their constraints, also understanding the VA loan and servicing them to the highest ability to help them settle into their new duty station and their new communities where they're going to be living and raising families. You'll see the typical relocation cycle, that's every 18 to 36 months. We were at a conference in Washington, D.C. 2 weeks ago, and there was a poll that they sent out asking how many times people have PCS, and there was somebody over 20 times in their husband's military career that they have PCS'd. That is not the case for everybody, but just know that that is a constraint and that is something that they go through. So there's costs around the PCS. The financial stability before and after relocation. 32% of active duty families PCS within the prior 12 months. There's no guarantee that you're going to stay even a year at a duty station. So there's a good possibility that you will be relocating again, PCSing again within that 12-month period. So some stats here. So before a PCS, 74% of our military members have reported doing okay and living comfortably. After that drops down to 61%, saying that they have that same financial status. There are out-of-pocket costs. This isn't all funded by the government. So 69% of the active duty family members have paid over $500 in unreimbursed PCS expenses. That's tight on the pocketbook. These are immediate, they're unavoidable, they don't have the choice. And so every opportunity we have to assist in, again, that process when it comes to home ownership is integral when we're talking about our active duty military members. 52% of those polled said that it took them over 12 months to regain that pre-PCS financial stability. And then, unfortunately, oftentimes that overlaps with them PCSing to the next one. So it's a cyclical process. Spouse employment is a key driver towards this financial stability. 72% the spouses have said that it's taken more than 3 months for them to secure a job. Employment delays directly affect, obviously, that recovery timeline. And if they're not able to, so let's say they were a 2-income household prior to, and then they PCS, obviously that that household income affects what that looks like at their new duty station. So it's a kind of a compounding effect whenever you're doing those frequent relocations. Um, there's really little to no buffer. And some of the key takeaways that we really want you guys to understand, PCS is predictable, um, but it's a mitigated financial shock. There's unreimbursed costs and spouse employment gaps that drive that instability. And then sometimes that recovery timeline supersedes the next deployment or the next PCS, and they never really truly do recover. So there's different ways that you can structure the purchase of the home at the new duty station to help mitigate and lower those expenses. So thinking outside the box and understanding where they're coming from. It's not that they aren't financially stable. It's not that they don't know how to have a budget or control their money. It's that this move is not something that they have control of. And so any help that we can get to try and ensure that they pay as little to nothing out of pocket is the best way to say thank you. So balancing the narrative around military service, I kind of gave you all of the constraints, kind of all of the negative, kind of the bad, as far as it sounds. It's not all doom and gloom. The military families are very proud to serve. They're very proud of their sacrifices. They do it. There's a lot that do it willingly. Spouses are proud of their spouses, their service member. But unfortunately, only 1 in 5 are satisfied with how their service is portrayed publicly. Public narratives often emphasize hardship over benefits. In our local markets, in your local markets, our MSOs and VSOs play a critical role in helping kind of beat that narrative. So an MSO is a military service organization, and a VSO is a veteran service organization. So think of your American Legions, your VFWs, businesses, locations such as that. They help balance the challenges and the benefits of service. There's an increasing military cultural competency with these VSOs in play in our local communities. They also bring opportunities to integrate and bring together our military and civilian families, and those civilian families understand more of the military culture. Especially when you're talking about your legions and American Legions and your VFWs in your local markets. Showing appreciation for those who have served. So according to the survey by Blue Star Families in YouGov, 45% of civilian respondents believe the public truly does appreciate the service, but that's less than half. That's 45%. That's on the more of the veteran side. Yet only 19% of the active duty families actually feel that appreciation. That's sad. I feel like they should be shown appreciation. They are putting a huge sacrifice in for our freedom. So despite the American public's faith in and support of military families, these families feel increasingly disconnected from American society. It's a major opportunity for all sectors, the government sector, private, public, and civic, to bridge this gap in perception, competency, and support of military family service. An example that I'll give you with this appreciation is if you have a downtown district, for instance. Here in our local market where we're at, we have a riverfront, and on that riverfront there are 9 telephone posts. So there's a group of us that have worked with our local government and Chamber of Commerce to annually put up hero banners. So every year we take in applications and vet out. We've been lucky not to have more than 9. Would love to see that number increase, obviously. But anyway, we take those applications in, we order the banners, The city hangs them for us on Memorial Day, and they stay up until Veterans Day. And then on Veterans Day, we take them down and we give them to the military member's family. They don't have to be deceased. I'd be happy to help anybody set that up in your local community if you're interested. Just little things like that go such a long way to your veterans in your community. And if you're in an active duty area as well. Supporting military families where it matters, building wealth through home equity. That's what we are all here for, is our expertise to help build wealth through home equity. So a little bit about the VA home loan. It was actually established in 1944, thanks to Franklin D. Roosevelt signing the GI Bill. The cornerstone of the original GI Bill was the VA home loan. It was created to support veterans that were returning back from World War II. They were trying to reduce the economic and social challenges of that post-war readjustment, and create a cost-effective alternative to cash bonuses. So offering a longer-term value to our veterans, which is quite interesting. But truly building wealth through home ownership back in 1944 through the VA home loan right here. So the VA, one misconception is these loans are directly approved through the VA. The VA does not lend money. There's a lot of veterans out there that think that these loans go through the VA directly. There's a lot of consumers and civilians that think the same way. That is not the case. The VA guarantees a portion of the loan on the veteran's behalf that covers that upfront equity position that most banks and mortgage companies require to not have mortgage insurance. So the VA actually guarantees 25% of the purchase price to the mortgage company and to the banks. That is what keeps the loan out of having mortgage insurance and the veteran from having to put a down payment. And we'll caveat, there are certain situations where on a VA loan, there may be a required down payment. We do a lot of webinars digging into specific topics within the VA loan. So keep your eyes peeled on that, and that information will be on there. But the VA loan, the way it is structured, does not require down payment and does not have mortgage insurance for the veteran. So interestingly enough, the maximum VA loan guarantee was $2,000 initially. It's $36,000 now, to give you an idea as far as what they guarantee. That's not a loan amount. That's the amount that is the guarantee. It used to only be available to World War II vets for the purchase and new construction of a property. Now it's open to all veterans, and it's purchase, new construction, interest rate reduction loan, which is our EARL, cash out refinances. There's even a VA loan with an energy efficient improvement option as well. So veterans previously had a 5-year post-war window to use their single benefit, or they lost it. Now you can use it at any point in time, in service and post-service. And you can use it more than one time. You can actually have more than one VA loan at a time. So active duty service members initially were not able to use the VA loan. You had to be post-service. You had 5 years or you lost the option. And it was only for a 20-year term. And the VA set the rate. So it is now standard conforming loan terms right now that they can go up to, and it is set by the market. It is not mandated by the VA. It's set by the secondary market, just like the rest of our conforming fixed rate loans. The key benefits. So the key benefits of the VA loan: there's no mortgage insurance assessed on the loan. It's up to 100% financing for qualified borrowers, veterans, and active duty service members. There are lower closing costs. The VA also has a cap on the amount of closing costs that can be assessed to the seller. It is a lifetime benefit, so it can be used multiple times. VA loans are assumable. I'll give you a quick explanation of what an assumable loan is. A VA loan assumption is, well, an assumption period is where a borrower qualifies for the type of loan that, or a potential buyer qualifies for the type of loan that the home seller currently has on their mortgage. So in a VA loan situation, a potential buyer would need to qualify through the seller's mortgage company for that type of loan that they have, and they essentially assume those payments over. So the term that's remaining on that loan, the interest rate that's on that loan, that all stays the same. It's kind of you plug the buyer in, and then the seller is released of their liabilities on that mortgage and that home when they sell it. If it's the buyer's not a veteran, the veteran's entitlement does not get restored. So there's one thing to keep in mind if you're representing a veteran seller and you're marketing their property as an assumable VA loan. We want to protect them and make sure that they're fully aware of what that assumption means. So, what to know about the VA loan? I went over this a little bit. The loan purpose types, a purchase, on a purchase transaction, it has to be a primary residence only. They can do a 1 to 4 family unit. They just have to occupy one of the units as their primary residence. That must be their intent, is to occupy it as their primary residence. They do have the option to do 100% loan to value cash out refinance to pay off debt. They can roll a non-VA loan into a VA loan. So let's say for whatever reason, a veteran or a service member has an FHA loan and they want to take advantage of the no MI refinance into a VA loan. That's considered a cash out refinance since it wasn't a VA loan. The EARL, that's that interest rate reduction loan. So that's a VA borrower that's in a VA loan refinancing in keeping a VA loan also, but dropping the interest rate. It does reset their term, but they drop their interest rate. The EARL is a streamlined refinance. So the VA and the banks look at the fact that they're making their payments on time. They're already in this loan. Let's help them be more financially sound by taking advantage of the lower rates in today's market. EARLs will be our next topic actually next month for our webinar. So you'll be receiving some information with regards to that. The EEM, the Energy Efficient Improvement Mortgage, that's going to allow them maybe to put a new HVAC system, some solar panels. There's different energy efficient options that they can roll that cost into their mortgage. I did not mention there is a VA reno loan that's out there. So non-structural renovations can be rolled into the cost of a purchase. This is a great option, especially for active duty service members. If they can't find that perfect house, they're a lot of times most of the time they're on a really constrained timeline. So maybe they find a house that could use some love. It still qualifies for the VA financing. There's no major issues, but it needs to be updated. They can take advantage of the VA renovation loan program at the time of purchase. Happy to go through in detail more any of these options. Again, eligible property types. So single family homes, both attached and detached. The 1 to 4 unit properties, it's a great way, again, to build wealth through home equity. They can buy that fourplex, live in one of them, earn the rent on the other 3, and not pay a down payment. It's a great opportunity for our service members and veterans to build some wealth. VA approved condominiums. The condominiums do have to be VA approved. just like with Fannie Mae's got their approved list, FHA as well. PUDs, planned unit development, manufactured homes. So manufactured homes qualify for VA financing as well. And then newly constructed homes from a VA approved builder. I will caveat, VA does not have an approved builder list. They do, however, have a documents that the builder has to sign, certifying certain warranties, insurance, and so forth, similar to FHA. We need to change the wording on that because I don't want to misspeak and think that there's an approved builder list. There's not. 95% of builders, I'm sure, would qualify. There's no builder list. So we combed through our data. We did some data analysis, and we looked at what is our VA loan borrower profile. What does the profile look like? Again, a lot of misconceptions around the VA loan because it's no down payment. There's a lot of times veterans have more than enough money to put some money down, and sometimes they do. Sometimes maybe they want to invest. Maybe they have a plan for that money, and it makes sense for them to work with their financial advisor to use those funds in a different way, especially when interest rates were low. It made more sense a lot of times for them to invest it versus putting it down on the mortgage at a 2.5% interest rate. And even if they didn't have the money, the VA loan borrower profile from Newrez's perspective is the average loan amount's about 435,000. Average FICO score is 725, and average debt to income ratio is 32%. So again, a very, very strong credit profile. Sure, they would qualify conventional all day long, but that doesn't mean it's the best option for them. So really educate not just your buyers, but your sellers. There's a lot of people in our industry that kind of shy away from accepting an offer from a VA client because they think there's all these hoops to jump through. And that's just not the case. There's not a bunch of hoops to jump through. The underwriting is a lot more lenient. There's a lot more gray areas. We look at residual income versus just your gross income to your DTI. They've got that BAH if they're an active duty service member. BAH can be grossed up. So there's more benefits to the VA home loan than there is non-benefits. So some key terms to know. The COE, so this is the certificate of eligibility. It is not the DD-214, which I actually don't even have on here. I apologize. Let me start with the DD-214. That is a document that all service members and veterans receive that give an outline of their service history. So the DD-214 is going to give all of their service dates. It will give any deployment dates and the era of service, the war that they were deployed in. It will show any honors that they received. And when they go to retire, it will give their retirement pay, the disability. It's almost like their HR record, if you will, the DD-214 is. The COE is the certificate of eligibility that's specific for the VA home loan. So this is the official document that verifies that a veteran service member or an service member of eligible surviving spouse, or this should say, I'm sorry, a veteran, a service member, or an eligible surviving spouse meets that service requirements to qualify for a VA home loan. So to that point, a surviving spouse and has not remarried can use the VA home loan benefit. The COE is required on all VA home loans. That's what tells us all of the requirements as far as the intricacies on the loan itself. It will let us know if they are exempt of the funding fee. So there's an upfront funding fee that's assessed. That is waived if they're 100% disability, or actually if they receive any VA issued disability. So there's a lot of information on there. The entitlement, it shows us their entitlement as well. The entitlement's the actual dollar amount that the VA will guarantee the lender if the borrower were to default on the loan. That again is the down payment that, or the guarantee from the VA that keeps the mortgage insurance off of the loan. So the VA guarantees typically 25% of the loan amount. And we caveat all of that because once entitlement is used, you have your basic entitlement, and then you have bonus entitlement if you're looking to use it a second time while you still have the first loan. There's restoration of entitlement as well. So if you have a service member or a veteran that has a VA loan, they sell that house and they're going to purchase another one, that entitlement's reinstated whenever they sell that first house. And so the entitlement part, whenever I was talking about loan assumptions, the entitlement is what is not restored if the person assuming that VA loan is not a veteran. Excuse me. The LES, that's the leave and earnings statement. That's their paycheck. It's the comprehensive monthly document, aka pay stub, that details a service member's pay. That's the document that shows what their allowances are. So the BAH is an allowance. There's a COL, which is cost of living, an allowance. There's BAS. There's several different allowances depending on their assignment and their rank. All of that is listed on there. And as long as those allowances are going to continue, if they're PCSing, all of those can be used. It is public record. These are government employees, so it's accessible via the MyPay website. So if you have a service member that is trying to obtain a loan, they don't have access, they're overseas, for whatever purpose they're deployed, they can't access their LES. There is a way publicly to access that. Kind of gone over the BAH a little ad nauseum here for you, but just reiterating, it was initiated to help offset the cost of housing when, as our on-base housing or the enlisted members get to a certain rank and they want to start living off house when government quarters are not provided, I should say. Tidewater. So the appraisal, right? That's the biggest, I would say, probably one of the biggest misnomers on why people think that the VA loan takes so long is because of the appraisal. The VA did just roll out some updates on turn times for VA appraisals, and they've improved slightly. But the VA does give the appraiser a certain amount of time. It can be up to 14 days to do the appraisal. Most of them do not take that long. It really depends on the area that you live in and the accessibility of a VA appraiser, because they do have to get certified and approved with the VA and where the property is located. But Tidewater is a unique aspect of it. VA loan's the only loan that has this option. It's a safeguard that was that's invoked when an appraiser believes that a home's value is going to come in low. Nobody likes it. Everybody hates whenever we get that appraisal in. We have no idea. We open it up. We're all excited, and it's below contract price. There's nothing worse. So the Tidewater, the VA, the appraiser will invoke Tidewater. They will reach out either to the lender or to the agent directly, or both. And they will let them know that they've invoked Tidewater. You got 48 hours for the agent, the realtor, to put together comparables to justify the value that they came up with at that contracted price. There's even been instances where we've gone through this Tidewater process, right? The appraiser still issues the appraisal and it comes in low. We had an instance, or I've had an instance in the past where it was still about $10,000 low. We went to the VA directly with a letter from the buyer, from the veteran, on why they needed this house and why they felt what they were paying for was justified, along with the CMA that was put together, and it got approved. The VA actually overrode the appraiser. So when people are talking about the process, the appraisal process, and this is a benefit for all parties. It's a protection around the veteran, but it also protects that seller. The assumable VA mortgage, again, it allows a buyer to take over a seller's existing VA loan term. They do not have to be a veteran, but once again, if they're not a veteran, that veteran's entitlement does not get restored. So that's always something to keep in mind. And then again, the PCS permanent change of station, it's the official transfer of our service member and their family from one duty station to another, hopefully lasting 2 to 4 years, but that again is not always the case. A lot of times that PCS process is why people do go into service. I was speaking with a veteran and his spouse that retired out. He actually was Marine or Navy first, retired, and then went Marine. And they did that just because they wanted to continue to see the world, which I thought was wonderful. That is the end of the webinar today. I want to really thank everybody for their time. I went over a lot. I know I kind of talk fast and I apologize, but understanding the overall overarching profile really of our service members and our veterans is important for us to be able to raise the bar on that client experience for our service members and our veterans. It's the best way, again, that we can say thank you by serving back through our industry and our expertise.